So, as I was brushing my teeth with a bottle of Jack, it turns out that the US Senate passed President Biden's $1.9 trillion stimulus bill, and the markets came roaring back like a child who got the sugar hit for the first time. I'm obviously just kidding. I brush my teeth like every other normal person. Anyway, the US futures shortly went up, ASX 200 jumped from the news, and I was hoping that the red days could get dragged on a little longer because I'm not done buying yet. But nevertheless, it seems like the government pulled out their money printing machines and they made it rain again. Without boring you, that kind of money printing activity will likely drive inflation to be higher in the future. Basically, high inflation will negatively impact growth stocks, whereas it'll be more of a positive impact for traditional value stocks. That's a very generalized statement about inflation, so I'll expand on the concept more in a future video dedicated for inflation. So in this video, let's go through Zip's half-yearly report, and I'll make some comments around how the stimulus bill might impact Zip's future. As usual, I'm just some random Asian dude you found on the internet, so no, I am not a professional, and this video is not financial advice or recommendation for you to do anything. It's just general information to hopefully brighten up your day a little bit. As of recording this video, Zip was trading at $9.26 with a 5 billion market cap. So by the time you're watching this, the share price probably have already changed. Similar to my Afterpay video, what I'm most interested in, especially with these half-yearly earnings report, is retention rate, repayment velocity. I find those way more interesting, so I'm gonna go over those first before I talk about the financial statements. With Zip, I love the fact that the repayment velocity has increased substantially. So instead of taking 8 to 9 months to get their money back and then lend it out again to make money, Zip is essentially getting their money back in 3 months. And this is largely because Quadpay's transactions tends to be smaller, shorter term, so it has a much faster repayment velocity. Call me crazy, but I think Quadpay is one of the best move, if not the best move, Zip have pulled over the last few years. Not only did Quadpay give Zip access to a ginormous US market, but the way they're acquiring customers through the virtual card, the app, and also the Chrome extension is enabling the company to go beyond consumer discretionary items like clothing into something more essential like groceries and bills. The ability to buy now, pay later, groceries and bills is potentially underestimated. I do not have hard statistics to back this up, but I think although a massive stimulus bill is passed, with the fear of unemployment, even though they're getting extra income, people might be incentivized to spend money, but they might buy now, pay later items to make sure they have a large cash cushion just in case something happens. This is a bit deep into the speculation zone. I just want to share how I think about things. Well, this is the graph where I got the idea of buy now, pay later bills and groceries. Now, the fact that Zip have added these 3 subcategories onto their slides, it's essentially saying, at least in my opinion, that the probability of those subcategories growing in spending is increasing. Now, this whole flywheel they included in the half-yearly report is a bit complicated, so let me simplify it. Now, the way I understood that flywheel is that as Quadpay is enabling people to buy now, pay later almost anything, including groceries and bills, more and more merchants will want to join the platform. And as more merchants want to join the platform, it will attract more buy now, pay later customers. And that's essentially the virtuous cycle Zip is trying to describe. App transactions on Quadpay has been absolutely massive. From December 2019 to December 2020, it has grown over 700%. At the same time, take those numbers with a grain of salt because the pandemic would have definitely helped out those metrics. And what you see in front of you is some of my favorite metrics. So US returning customer contribution, which is essentially retention rate, and monthly gross bad debts. Now, returning customers account for greater than 85% of monthly orders for Zip's US business, and that's massive, by the way. Now, gross bad debts are trending down over time, which is also a really good sign that they're managing their customer risk profiles really well. But similar to my Afterpay video, it's really worthwhile paying more attention into this because the percentage of gross bad debts improvement can be deceiving if the monthly transaction volume is growing to be a massive number. Okay, just a bit of numbers to wrap up the Quadpay side of things. Now, the total transaction volume in the US have grown by 256%. And at this point, if they can keep growing even at a percentage of that, they are essentially going to eclipse the Australian total transaction volume. And of course, with a 256% growth rate in TTV, all the other metrics are going through the roof. Customers have grown by 200% compared to the same period last year, and revenue have more than grown by 250%, not to mention that the app downloads have more than doubled. Okay, let's talk about Zip's ANZ growth. Over the same period last year, they have grown their total transaction volume by 58%, and metrics across the board have also improved as well. Now, these are more of my favorite metrics to look at: engagement per customer cohort and revenue per customer cohort. Now, on the left-hand side, what I'm really looking for is that if you look at this teal curve right here, which is the 2019 cohort of customers, and you compare that to the orange cohort, which is this orange curve right here, the steepening of the curve is essentially telling me that as time go by, which is the horizontal axis, customers are making more transactions because that's the vertical axis. But what's really interesting is that if you compare this to the curve on the right-hand side, if you look at the cohort of the 2020 customers, the average revenue per customer isn't really changing all that much. And that tells me that even though customers are making more transactions, that average transaction size is becoming much smaller. So I'd love to know what you think about that, and make sure you talk to me in the comment section below. Now, if we look at Quadpay's gross bad debts, then we have to look at Zip's gross bad debts. And over time, you can see that they have made some pretty big improvements, but I don't really understand why they report January 2020, but don't report the December 2020. But then they report the December 2020 numbers for net bad debts on this side. Now, when it comes to Zip's strategic partnerships, they are pulling this lever to accelerate growth as well. What's really interesting is that Stripe is on their investor presentation, but I can't find any documentation on Stripe's website about Zip. So if you have any additional information, please let me know in the comment section below, because I know that they are saying that they have payment partnership with Stripe and others to drive efficiencies, but I can't find the documentation around that. And the other thing that really stood out to me is that Goldman and Oaktree is providing funding for Zip to grow in the US. I do have an interesting observation that I'm going to share in the comment section below. I'm not going to include in this video. Overall, for Zip's ANZ business, it shouldn't surprise you how well they've done. And compared to the same period last year, revenue have essentially more than doubled, customers have more than tripled, and so did transactions as well. But the thing that puzzled me the most about Zip's business is that when is Zip going to do some gangster with Pocketbook? If you read Pocketbook's privacy policy, then it should be obvious that Zip have positioned themselves to be able to do something from the insights from Pocketbook. Afterpay has to build a new service with a bank to get transaction insights like the ones that Zip has with Pocketbook. So I don't understand what I'm missing here. Are there significant legal hurdles that Zip has to cross in order to action on some of the insights from Pocketbook? And then with Zip's income statement, it seems like everyone is reporting things a little differently. If I understood Zip's income statement correctly, then these are cash numbers, not accounting numbers. So in that sense, they are a lot more real. And the thing that really stood out to me is that the cash gross margin is expanding and it's at 54%. Now, the cash gross margin at 54% is really different to the numbers I have in my comparables table. I talked about the current valuation of Zip in the Afterpay half-yearly earnings video. So make sure you check out that video if you want to hear some of my thoughts around Zip's valuation. Now, compared to some of the other buy now pay later companies, more than 80% of Zip's debt facility is drawn and deployed. And it's also evident that their cost of funds is slowly creeping up. The higher cost of funds is likely going to impact Zip's gross margins moving forward. So it's definitely also something really worthwhile paying attention to. The balance sheet and cash flow statement is pretty vanilla. There's not too much to talk about, so feel free to check out those statements in your own time. But the last comment I want to make about Zip is that while the growth has been nothing but impressive, and comparatively speaking, you can argue that the market is just not giving the respect that Zip deserves. However, higher inflation rate and interest rate is likely going to impact Zip's business, not to mention pull down their valuation as well. So it's important to take that into account when evaluating a company like Zip. So thank you for watching this video all the way to the end. If you want to support the channel, not to mention access to additional content pieces and be part of my fortnightly Q&A, consider supporting the channel via Patreon. Nevertheless, if you have learned something new, remember to gently smack the like button right there, subscribe to my channel so that when I release future videos, you be the first one to know. Until next time, my name is David. Otto will always do the honors and see you very, very soon.